You may have noticed in the past that markets often predict when bad news is going to come out. It happened this week with some of the vaccine stocks. I'll explain why. Plus, I will do my regular weekly market analysis. We've had a lot of volatility. We'll try to figure out if there is a crash coming. Of course, we'll look at the day trade of the week, and then we're going to do a market scan that utilizes the Stockscores indicators to help you find longer term investment opportunities. That's all coming up. So this past week, there was news from Merck that they had a pill you can take if you get COVID, and it is good to keep you out of the hospital. The result was that many of the vaccine stocks went down a lot. Of course, the idea being that you don't need to get vaccinated if you can just take a pill. But these stocks have actually been going down for a while. So I want to talk a little bit about why a stock is ripe for a pullback, why profit taking is an inevitable thing at a certain point. When upward trends in hot stocks go parabolic, in other words, they go from moving straight up in a linear fashion to going parabolic to the upside in a curve, well, that's a sign that anyone that is going to buy has probably bought. The story becomes so widespread that people that maybe have never even bought a stock in their life are buying the stock thinking it is the hottest tip. And that is what causes parabolic trends. Well, when you get a parabolic trend, it really means that there's just not a lot of new buyers available to buy from the person who just bought. And even if the story is still good, it only takes a little bit of bad news to cause people to want to sell. And if there's not enough new buyers coming in behind them, well, then the trend starts to reverse. The point is, when a trend is going parabolic, and I'm going to show you some charts in just a moment, but when the trend is going parabolic, when a hot stock has been going up month after month, and finally it really starts to go into a steep upward trend, that's probably a sign that the bubble is about to burst. And we saw that with vaccine stocks in the last couple of months. And really, the market predicted, you could say, the bad news that came out for vaccine stocks last week when Merck announced their magic pill. Let's take a look at the charts of Moderna and Pfizer. And this is the Moderna chart first. And you can see at this stage, it's a linear upward trend. And then it starts getting steeper and steeper until it's a parabolic upward trend. You can see it goes from straight to a curve. Well, when it broke the parabolic trend, that is a sign that the bubble is bursting. Now, it took a little while, but we started to build falling tops, and in the last week, it's been going down. Well, the news from Merck came out here, well into the downward trend. Because, of course, in all industries, there are some people that have better information than others, and they predict these things. They don't really predict it. They just know the information before most people. Let's take a look at the Pfizer chart. You can see again here, it goes from being a linear upward trend to getting steeper and steeper till it gets to be a parabolic trend. I call this a bursting bubble candle. It happens when the market hits a new high in a parabolic trend and trades big volume. That's usually the top. So what you want to watch for when you own one of these hot stocks is when they go parabolic, look for that bursting bubble candle. Hit a new high, close below the open. That's why that candle is red. You can see it closes below the open after hitting a new high with very strong volume in a parabolic trend, and that is the start of the downward trend. The news, the negative news, actually came out long after, but the market predicts it only because the market just runs out of new buyers. All right, let's take a look at our regular weekly market analysis, and we'll start off with the US markets as we always do. And you can see here that we are in a downward trend in the short term. We ran away from it, we came back, we rolled over at the trend line and moved back down this week. we've managed to hold this short-term support zone, but what we want to see is for this downward trend on the short-term chart to be broken. So we need to come up and go through that downward trend line before I'm going to feel optimistic in the short term about large cap US stocks. Now here's the long-term upward trend for the S&P 500, and you can see that this upward trend is getting threatened a little bit, so we need to watch very closely. We'll see if the market can continue to bounce back this coming week, but things looking a little shaky there, much like it did back here where we had a little bit of weakness. That was last fall, right? Here we are this fall, kind of the same thing, and there's a reason for that. The markets tend to be weakest in September, and it often can carry through into October, but usually by middle October into November, the markets start to ramp up again, and we get a great season for trading stocks from the fall into the spring, into May. There's a saying, go away in May, come back in October, November. That's not really the saying, but it's basically the gist of it. All right, let's go into the NASDAQ 100, and you can see some weakness there this past month, but the upward trend line on the NASDAQ is still intact. We are at support where we should bounce. We tried to do that on Friday, so we'll see if that can happen again. On to the IWM, the small cap sector has not kept pace with the large caps. It's been going sideways since February, and that has meant trading action a little quieter. Of course, at the end of last year and into the first couple of months of 2021, we had a great market for traders. The small cap stocks were really moving. Well, that got quiet, but it may be that this is the place that we're going to get the strength again, because those small cap stocks are actually showing some life and starting to generate some pretty good trades. Every day I'm finding 3-4 stocks that make big gains, at least 3 or 4 stocks. And so if you are a day trader, a swing trader, focus on those small caps. They're starting to get better. All right, Canadian markets, similar story as the S&P, short-term downward trend. Short-term support is intact. Long-term upward trend is being flirted with. Perhaps that trend line will be broken. Hasn't really happened yet, but something to watch for. On the TSX Venture, those micro-cap stocks in Canada, they have a pretty negative pattern, building pessimism towards support. Could break down and perhaps move down to this next level. But if it can break this downward trend line with a move to the upside, well, then we can get optimistic about the TSX Venture stocks again. Currencies, US dollar has again made that breakout. I described this breakout back here. It took a little while, but we're now getting follow through. I think the US dollar more likely to go higher than lower in the months ahead. Looking at the Bitcoin market, it is in a downward trend, very similar to what I talked about on the vaccine stocks. Linear upward trend went parabolic, and then it broke the parabolic trend, and we've really been suffering since then. If it can break this downward trend line from a rising bottom, then I think there's cause to be optimistic about Bitcoin, but for now, not optimistic. On to Ethereum, which actually looks quite a bit better. It is still in an upward trend. It's choppy, lots of volatility, which shows us lots of uncertainty, but it's building something called a pennant pattern, and it may be in the months ahead. I don't think it's going to happen next week or anything, but in the months ahead, we could get a breakout from that pattern. So keep an eye on that. Hasn't happened. Something to watch for. Commodities, gold looking fairly weak as the US dollar goes up. That is hard for gold, and I think gold more likely to go lower than higher. But oil has been strong of late. It broke through that resistance we talked about last week, and it looks more likely to go higher than lower until we break this little upward trend of support. I am a bull on oil. Finally, the fear chart, pretty low, a little bit elevated from where it was a week ago, but still in the context of history, fairly low. All right, so my ratings then, neutral on both time frames, neutral long-term on both US and Canadian stocks, but short-term bearish. We need to be careful, particularly with the large cap stocks. Small cap, I'm not too worried about. Gold, neutral long-term, bearish short-term. Oil, bullish on both time frames. More weakness in large cap stocks this past week as investors continue to take some profits where there have been stocks that have made strong runs higher. Well, small cap stocks really haven't had those strong runs higher, and so they're holding up very well and presenting short-term trading opportunities every day. Gold is weakening, oil is holding up well, the US dollar likely to move higher, and fear is low. All right, let's take a look at the day trade of the week, an example of a stock picked up in my active live sessions where we run a complex algorithm on every US stock in real time, looking for those that come alive with abnormal activity. When one does, it makes something called an action candle. Action candle is a 2-minute bar on the chart that has abnormal moves to the upside with abnormal volume. We use that for day trading. We also look at 13-minute action candles for swing trading, but today we're going to talk about this. And what I really want to focus on is how to deal with stocks that are giving good buy signals but make large price gaps. Because price gaps often pull back, they fill the gap. So we want to be cautious with those. And so what I like to see is a pullback and then a move back up through the action candle. I call that the second signal. And it did it on one of our focus stocks from Friday. It made an action candle right at the opening bar of the day, 932. But you can see there that large gap. And so that always makes me a bit cautious because there's a lot of motivation for the people that owned it before the gap to sell into that strength. And that's exactly what happened. The stock went up a little bit and then kind of drifted lower until almost 11:30 when it made its second signal. It moved up through the action candle close. That to me is the ideal buying time, and that led to a good gain. Now in this trade, for our risk management, for every $100 of risk, we would buy 1,240 shares. That's about $8,700 in capital, but you can leverage that 3-to-1, which was $2,906 of capital. By the end of the day, that trade had made 6 times risk. So for every $2,900 you had to tie up, you earned a $600 gain. That was a 20.6% return on a one-day hold. That's the kind of trades we love to see. Let's now run a Stockscores market scan where we can utilize the Stockscores indicators. If you're looking for longer term trades, what we call position trades, where you're going to hold for months typically, what you want to look for is to have that sentiment stock score greater than 80, sentiment stock score greater than 60, and the signal stock score spiking up above 80. When we have that, all we have to do is check the chart and ask ourselves a simple question: is this stock just starting an upward trend, or is it already well into it? Because the stock scores will stay elevated as long as that stock is doing well. We want to find that first instance when it's got the good stock scores and it's just starting an upward trend. And to do that, we run a market scan on Stockscores called the Stockscores Simple. So I'm going to run the Stockscores Simple weekly on the US market. Actually, not the weekly. I'm going to run the Stockscores Simple US, which focuses on the daily interval, and run that market scan. And you can see that it found 87 stocks. So as we go through these charts, what I'm looking for are stocks that are just getting started. Most of them will be well into their trend already. So for example, Blue Apron, which was a stock that I discussed recently in one of these videos, it's been doing well lately. It started its move 3 weeks ago, so it's too late. Good if you bought it back when we first discovered it. CRK, another example. It's been moving up all month. We want to find those that are just getting started. So I'm going to go through these fairly quickly because I know that there's one on page 3. So let's actually jump ahead to page 3 just to save time in the video here. I went through these prior to recording the video. And what we'll see here is an example of what we're looking for. So this company, RCM is the symbol. It breaks the downward trend line about 3 weeks ago. It builds a rising bottom in the last couple of weeks. And on Friday, it broke up from a rising bottom. And you can see the stock scores, which have been pretty low, have now gone above 60 and above 80. The sentiment 62, the signal 91. It's a good chart pattern. It's not ideal. And the reason it's not ideal is it lacks abnormal volume and it has a fair bit of resistance from this trading range right there. So I would give this a 6 out of 10. That means I think it has a 60% chance of going higher. And we can just continue to cycle through charts, looking for those that are making fresh breaks and look to see if they have volume confirmation and that sort of thing. Here's a stock that actually did this a couple of months ago, but it hasn't really gone anywhere yet. This is a pattern called a pennant, and it broke out with some good volume, and it's been going sideways ever since. I actually still like this chart. You can basically buy it today for what it was at when it made the breakout, but let's take a look at the 3-year chart, because when you're doing this, you always want to look for confirmation on that longer term chart. And here you can see that the stock is just getting stuck at those highs there, but I would keep a close eye on OPRT because it's got a nice pattern, and if it can start to get through that $26 level, I think this stock can go higher. I would give this a 6.5 out of 10. All right, so that's a little example of what I teach in the various Stockscores courses. I do have a mentorship and some course classes coming up later in October, November. I'll be announcing the dates for that soon. So if you're on the free weekly newsletter list, you'll get an email soon with our upcoming sessions for the mentorship and some upcoming educational webinars that I'll be doing. Make sure you're subscribed to that free weekly newsletter. Just go to stockscores.com and under the trader training menu, I believe, or no, under Stockscores analysis, you can register for that free weekly newsletter if you are not already registered. I want to thank you for joining me today. Hope you've enjoyed it. Subscribe to the channel, like, comment, all that good stuff. And we'll see you next week. Trade well.